Hey everyone, John Henry here, slingshotfutures.com. Welcome to the Daily Futures Market Outlook, where we take a look at our big six markets to formulate an attack method or a plan for tomorrow's trading, which is going to be the 2nd of the month. Welcome to the new trading month. We had a little bit of a choppy one. We had a couple bank holidays through Europe and the UK. We had President Trump on the microphone. Seemed to really kind of throw the markets around a little bit today, so hopefully you played it safe. And because of that, the European holiday, the Bund, which we normally cover, is not open today, so nothing has changed. So we're not going to be going over that one, but we will be covering the other 5, and that's going to be the Euro, Gold, the bonds, crude, and the S&P 500. Now, as always, before we jump on in, make sure to swing on over to the website, slingshotfutures.com, scroll down, click on the Join the Daily Outlook newsletter. That's going to add you to our email list so that you know every single time via email when one of these comes out. We also talk about a lot of different cool stuff, different cryptocurrencies and stocks and different trade ideas and statistics and all kinds of fun stuff. So a really good newsletter to be a part of. And then, of course, at the bottom of the page, you have our market psychology video, which we talk about every single day, where we break apart a market and really just kind of rip into the roots of what happened and why it happened to become better every single day. And then, of course, our live trader morning prep levels, which we post every morning for the big six as well. That will have you covered for all of the major levels. If you haven't done so already, make sure to click on the live trader room subscription and trial info and sign up for a one-day trial and see what we're all about. If you really enjoy it, you can check out our weekly and monthly options. And, of course, if you become a VIP member, the live trade room comes part of it, so you don't have to worry about paying anything ever again. Now, normally we would jump into the Bund, but again, the market was closed today, so nothing happened since the last time. So we'll start with the Euro today. Now, the Euro overall really didn't accomplish a whole lot, mostly range-bound. We opened up kind of, well, we opened up right here, and we're going to be closing right here. So the daily candle, well, it's not going to look that great, right? The daily candle is going to have a huge wick on the top, a huge wick on the bottom, and a little tiny body towards the bottom. It is closing bullish, I guess, but not exactly the most enticing candle in the world. So in really the grand scheme of things, the Euro is mostly range-bound. We had a lot of movement in between there, from the lows to the highs and back again. From the bottom edge, we found a lot of support off of the monthly area of support from last month, which in this case was yesterday, going into Friday's price action, giving us a bunch of support here at 91.90. We also have a major objective to the downside for the sellers here to come back down to 91.81, where we can possibly find some buying pressure. So there are some magnets here to potentially get the market to drop a little bit further. We also have a descending wedge coming down here, showing that the sellers do at least currently have the bias. But overall, again, we just got a big range. So looking to more so trade the extremes in the middle here, but we may have some opportunity around that 91.81 area. We know what to do with the range. Buy low, sell high, stay out of the middle, and well, right now we're kind of in the middle. So a little bit of a holding pattern there on the Euro. Both sides probably applicable. Looking at gold, a little bit of a breakdown here. When Trump started hitting the microphone, caused a lot of fluctuation. Gold shed points like it was going out of style. So we fell from the highs here at the beginning of the morning up at around 1272, 1273, and it fell all the way down to 1255. So a little bit of a tumble here on gold. We originally were looking for a possible larger channel, but that channel has since broken down below. Now, just because we have broken out of that channel doesn't necessarily mean that we can't still use it. It's just, in this case, we can use it as resistance instead of support. It's obvious that when we came down here the first time, they held it, right? We had a nice bounce off that level that gave us clues that even though this channel did now break down, they were respecting it at least a little bit. So when we come back to the channel, we're anticipating an area of resistance to form, and that area of resistance at this point in time is between 1259 even to 58.2, looking for some selling pressure inside here, back down to a new low to attempt another breakdown. Now, one level of concern, this is potentially looking like a little bit of a flag, and arguably you could even draw a little midline in there. But we have an area of rising support that is standing in the way, so if we are going to break down, we're going to need to break below that first, and maybe even be able to use that as resistance too. So overall, still definitely sell-side weighted, but there are a couple kinks in the path before we hit those lows, so just play it a little bit safe on the way down there. Over on the bonds also taking a big dive lower here, pushing down into last week's low, failing through the last week low, big blow off through that bottom and just never came back. Now, a lot of times when you get this big slam lower all in one candle that fails to continue, the market tends to want to come back and retest that area as a possible location of resistance. If buyers were stuck there, they're going to use that as an opportunity to get out at break even. And what better place to look for continued selling pressure to finish off another leg down? We do still have unfinished business down at 151.14, 151.15 in that area to the downside. So sellers do still have some objectives on the table. And if this is going to be a bear drop lower, nothing more than just a pullback and a drop again, that would be the next big target that I'm looking for is 151.14 here on the bonds. A little bit of a wedge, so until we get this out of the way, either you're selling at the high of that candle looking for possible resistance, or you're waiting for a little bit of a breakdown and a retest into that area to then drive it lower from there. So more aggressive traders, you may be able to find something now. Otherwise, conservative traders are still kind of waiting for this bullish pattern to get out of the way. Then on crude oil, a little bit range bound, but mostly kind of traveling ranges to the downside. We started off the week with not a whole lot going on, relatively calm and quiet. Broke down, form another range, broke down, form another range, broke down, form another range. So we have kind of migrating ranges to the downside here. A little bit of a bull flag forming. Very similar to what we just saw on gold, and kind of the reminiscent of the same argument, right? We're looking for the short side. We're looking for the downside momentum. It's just a matter of we don't want to sell too low, right? Especially with this amount of back and forth, you have a very good chance that it's going to go back up towards the highs and find some selling opportunities at a much better price rather than selling, down here hoping that it goes further. Selling low, looking for lower, that's not exactly a scenario I want to put myself in. So we're looking for a slightly better price around 48.84 to 82. That's kind of the hot zone that I'm looking for. Some possible selling pressure. Another thing that I might not mind seeing here is seeing this rally higher, acting as a bull flag with a breakout, trapping above the highs here, and then looking for some selling pressure in here, back to a new low as well. Either way, though, looking for some better pricing, and then looking to sell back down to a new low. And same thing that happened on the bonds we were talking about, rising support in the way. We have that same issue here on crude. We're going to have to work our way through rising support before we can get that breakdown to new lows. Either way, though, looking to sell, preferably at a better price. And then finally on the S&P 500, nice bullish rally, lots of fluctuation here. Again, Trump hit the microphone right there and was talking about different banks and tax rates and all that fun stuff, and that threw the market for a little bit of a loop. When it crashed down, we hit this major area of support, it reversed right back up again and didn't look back. And really that kind of tells us, in the grand scheme of things, if we zoom out here, we can see we're still stuck in that exact same place we have been for the past several days now. We just can't seem to get out of this area and find a location of, a breakout. They tried breaking out earlier, failed, collapsed right back down in. They tried breaking out lower, failed, popped right back up in, and now we're attempting to break out through the highs, and that also is failing and grinding back down again. So, over the multi-day picture, we're in a range and we're coming off of the highs, potentially looking for some selling pressure back down. In the short term, we have a nice bull trend on our hands, and we could still potentially be looking for buys. But given the overall back and forth that we're seeing on the bigger picture, I would rather buy as low as possible. We have a major area of support here at 23.83 and a quarter, and that would be as low as I would like it to go before finding some bouncing for a push up if this is going to maintain this weak bull trend. Either way, though, if that starts breaking down, we could be looking for a reversal back down to a new low, back to those multi-day lows once again. So overall, that's going to do it for the outlook. Now, looking at the news side of things here, we do have some stuff to worry about tomorrow. Today, obviously being a holiday, caused a little bit of a slowdown for the Euro and the UK side of things. But tomorrow, we don't have any of that to worry about. We don't have any U.S. news to worry about tomorrow, at least any big U.S. news. Out of Australia at midnight 30, that's 00:30 for you GMT military clock folks. We have the RBA interest rate decisions forecasted 1.5%. That's the same as previous. And they also have the RBA rate statement coming out at the same time, obviously. So that will be a big mover for our Australian dollar pairs. Anything related to the Australian dollar that will be probably pretty volatile around that point in time. Out of the euro tomorrow, we have at 3:55 in the morning, the German manufacturing PMI forecasted 58.2. The previous was the same, 58.2. And then out of the UK at 4:30, we have the manufacturing PMI forecasted 54. Previous was 54.2. So mostly they're anticipating about the same numbers as last time. And hopefully that doesn't cause too much volatility. But in terms of the US session, there's not a whole lot to worry about. After all of the whip and back and forth that we had today, it makes me a little bit nervous that tomorrow might be kind of slow. So I'll kind of have to play it by ear. But overall, like we always say, make the plan, trade the plan, follow those rules, and you should be A-okay. Until next time, we'll see y'all later. Bye.